Tesla, hello and welcome to Asking for a Trend. I'm Josh Lipton. For the next half hour, we are breaking down the trends of today that'll move stocks tomorrow. There's a lot to keep track of, so we're focusing on what you need to know to get ahead of the curve. Here's some of the trends we're going to be diving into. We are still awaiting that Tesla shareholder vote. We're going to get you the updates as soon as they come. Plus the state of the advertising market. We've got C-suite insight into how companies are spending and what that does mean for the broader economy. And Sweetgreen sliding on the heels of earnings. Going to get right into those numbers straight ahead. But first, ad spending is in focus this earnings season, and Mountain, the ad tech company that went public in May, reporting a record third quarter with revenue up 31% as more brands use its performance TV, and the company now leans into artificial intelligence. For more, we're bringing in Mountain CEO Mark Douglas. Mark, it is good to see you. So maybe start there, Mark, because you did report results this week. Walk us through what you're seeing in the business, Mark.
Well, for Mountain, we introduced the concept of performance TV, meaning instead of using television, we're talking specifically streaming TV, as just a medium for brand building, using it where you can drive measurable revenue for your business, and in particular for small and mid-sized businesses. And so we're seeing that market that we created continue to grow rapidly. These businesses are increasingly confident they can be on television. One of the big obstacles in the past was the creative. They don't have TV commercials, the company. I'm talking like e-commerce brands, travel brands, and so forth. So we introduced technology last week, AI technology, to help solve that problem also.
I'm curious in terms of ad spend, just more broadly, Mark, the trends you're seeing here. Are you seeing advertisers spend aggressively into Q4?
Yeah, absolutely. And again, mainly in the performance arena. So again, performance marketing is marketing to make money, like to specifically make money. So that's paid search, paid social. Now, Mountain Performance Television, those advertisers generally Q4 for performance marketers, the big quarter, obviously the holiday quarter. And so they are definitely going to spend in order to maximize their revenue in this quarter, which is generally the largest quarter for most e-commerce brands and most direct-to-consumer brands.
Advertisers, we know, Mark, they're leaning more on AI tools. How are you all leveraging that tech?
Yeah, so Mountain, we leverage it within our business across the company, marketing, sales, engineering, but we also can build AI tech for our customers. The single biggest area about almost 2 years ago, we introduced Mountain Match, which is AI targeting. The hardest part of doing performance marketing is who should receive the ad. These are not companies that have huge budgets, so every dollar counts. And so it's really critical not just to put ads into a market, but to the specific people who are most likely to respond for any given brand. So that was introduced. And now AI creative tools. We're partnered with a number of companies orchestrating multiple AI models in order to produce professional quality video. So that's really exciting. And then throughout the rest of our stack, I mean, everywhere you're going to apply learning models and AI technology to make it perform better.
You know, the street, Mark, is excited about your story. I mean, most analysts, I'm just looking at, they have a buy on the name. It does look like the stock is in the red since making that debut in the spring. Do you think is there a part of your story, Mark, that maybe investors aren't fully appreciating here?
Yeah, I think, look, we're doing this to build a company. We've grown 39%, an average of 39% over the last 6 quarters. Our guidance for Q4 was our growth rate to go up Q4 over Q3. So we're building for the long term. We've been consistently growing at those rates. We had record adjusted EBITDA profitability, and we had our first GAAP profitable quarter in 4 years and expect that to continue. I think investors will find the story. Sometimes ad tech can be a little confusing to people, but I think as we just keep scaling, I think our customers are finding Mountain, and I'm sure investors will too.
Big question for investors right now, Mark. I'm curious to get your take. You're on the front lines of this. AI boom, Mark, AI bubble. How do you think about it?
Well, maybe we go all the way back to 2000. It might be a bit of both. I mean, obviously, AI is transformative. It's transforming our businesses and really transforming the whole world and all businesses. So you can't really call that a bubble. From an investor standpoint, I don't set valuations. The market does. So I leave it to individual investors to decide how they should value, especially the AI-only companies like an OpenAI and so forth.
Finally, Mark, I got to ask, the actor Ryan Reynolds, I believe he's your chief creative officer, Mark. What exactly does that mean? What is Mr. Reynolds doing over there?
Yeah, so Ryan became part of the company in the middle of 2021. He obviously his marketing prowess is pretty much unmatched. So Ryan, George Dewey, and Maxim Effort became part of the Mountain team, and they've been very involved in our marketing as well as a number of key relationships for the company, and they continue to do so. And so I love working with them, and I feel honestly very privileged to work with them and get the benefit. I can give you a metric that kind of tells you the contribution. When I met Ryan, 2% of Mountain's revenue came from inbound leads. That's now 77% now comes inbound, or we don't have a sales rep call someone, the customer calls us, and that percentage continues to go up. And that honestly, that's attributable to our overall marketing effort and marketing team, and in particular to the Maxim Effort team led by Ryan.
All right, the Ryan Reynolds effect. There it is. Mark, great to have you on the show today. Thank you.
Thank you.
Turning to some earnings, Sweetgreen out with its third quarter results, and Yahoo Finance's Brooke DePalma joins us now for a look at the numbers. Brooke, what do you see?
Well, certainly what we're seeing here is Sweetgreen having a bit of a sell-off in after-hours trading after Wall Street really went into this report with really low expectations. And now these results came in worse than expected. Taking a closer look at the numbers, adjusted earnings per share came in at a loss of 31 cents compared to what the street's expectations of a loss of about 18 cents. Revenue came in at about 172. They were looking for 178. And same-store sales saw a decline of 9.5% in the quarter. Wall Street had already expected a decline of about 6.3%. And in the results, Jonathan Neiman, the co-founder and CEO of Sweetgreen, he said amid a challenging macro backdrop, their priorities remain clear: delivering operational excellence, accelerating menu innovation, and driving discipline. He went on to say that he's extremely confident that the leadership team and focused strategy will lead Sweetgreen back to sustained profitable growth. Now, after this company saw this decline of 9%. It yet again cut its guidance for fiscal year 2025 and now expects same-store sales growth to drop between 7.7% to 8.5%. That's more than the previous forecast of a same-store sales decline of 4 to 6%. Certainly not what the street wants to hear right now, especially in this environment. We're seeing all these fast casual players really see slowing same-store sales growth as consumers become more choiceful. They're really being picky about where they go. And it's worth noting here that heading into this report, we did get some rhetoric from the street, including Citi's John Tower. He said specifically an operational turnaround is being masked by a difficult market backdrop that likely worsened. Keep in mind, Sweetgreen started in the DC market. That makes up a majority of their base there. Of course, we have the government shutdown. They're suffering as well, but it tends to lean into these wellness trends that we've really been seeing win over consumers lately. But right now, fast casual not doing too hot, and this is yet another example of that.
I mean, the fast casual not doing too hot, does that just, I mean, it comes down to, is it rising cost, Brooke, and also just a consumer, or at least certain consumers feeling more pressure?
Well, think about what exactly fast casual is lapsing. Back in 2024, the value perception among fast casual had all these companies, Cava, Chipotle, Shake Shack even, and Sweetgreen doing pretty well. And now as that, consumer becomes more cautious, maybe they're turning to other brands. We're seeing McDonald's do a little bit better than what they were last year. Now we're not seeing the similar same-store sales growth that we saw last year.
All right, Brooke. Thank you. Appreciate it. Stick around. Much more Ask for Trends still to come. Tesla's annual shareholder meeting is now underway. We're awaiting the results for Elon Musk's $1 trillion pay package vote. And joining us now, we got Seth Goldstein, Morningstar Senior Equity Analyst. Seth, it is good to see you. So, the meeting's underway. We're waiting to see, Seth, obviously, are they going to approve this pay package for Musk worth potentially up to $1 trillion? Seth, we've had different financial analysts on the show recently who cover Tesla. We've had Tesla shareholders. When I would ask them, their bet was, listen, shareholders are going to approve this pay package, but I'm curious to get your take. What do you think, Seth?
I think it's likely that we see the pay package get approved. We saw last year's 2018 pay package put to a vote that got a strong majority. I'm not sure we get quite as large a majority for this vote, but I do think that ultimately it gets approved. Remember, Tesla's shareholder base has an unusually large retail holding, and I think the vast majority of retail investors are in it because they believe in Elon Musk and they believe Elon Musk is the right person to transition Tesla from an automaker to an AI and robotics leader. And so they think that if Elon and Tesla hit their operational goals and the stock hits its market cap goals, that Elon can share in the upside. So I think ultimately the pay package is likely to be passed.
So as a financial analyst, of course, covering the company, I'm curious to get your take on whether, does the pay package make sense to you, Seth? If Musk could really hit what are these big milestones, these really big performance metrics?
Yeah, I think it makes a lot of sense to give Elon Musk clear operational goals to hit, whether that's certain profit thresholds or certain operational performance goals, such as how many robotaxis need to be deployed, how many Optimus humanoid robots need to be deployed. And so this gives Musk clear objectives that he needs to hit, but then you tie that in with the market cap goals. So not only does Tesla need to hit these, larger operational goals, they also need to make the case to the market that Tesla is the true leader and that they can deliver strong free cash flow, a strong profit from these ventures. And so I think it does make a lot of sense. And if Tesla is able to grow its market cap to 8.5 trillion at the biggest tranche, then Elon Musk hits the full pay package. And if you're a shareholder today and you hold Tesla shares through it rising to an $8.5 billion market cap, you're doing pretty well. So then Elon gets to share in the upside as well.
Is there a metric in that package, Seth, again, as a financial analyst covering the name, that you place the most emphasis on? The EVs or the robo-taxis or the robots?
I think it's the deployment of the robo-taxis. I think it's the software subscriptions to full self-driving, and it's the number of humanoid robots. That's incentivizing Tesla to do what they say they're going to do. If they can successfully hit those operational goals, they effectively would have transitioned the company from just an automaker today and battery company to an AI and robotics leader. And that shows that their products are resonating well with consumers and with business customers potentially for something like an Optimus robot. So I think that the operational goals are a very important part of the package to incentivize Tesla to be able to actually transition to these new products that today really don't generate any revenue.
Musk will say, Seth, if you're in this name, then you believe the future is AI, right? The future, he argues, it is the robo-taxis, it is the robots. Is that how you see it?
Well, if you're bullish on Tesla right now, then you do think that real world AI is coming and Tesla is going to be the market leader. They're going to be the ones to figure it out the best. And so if you are bullish on that, then you think that robo-taxis will be coming and full self-driving will not just be in Teslas, but potentially be licensed out to other automakers as well. And Tesla will get software like very high profit margins and strong free cash flow as a result, because ultimately the software works. If you're also bullish on Tesla, you're thinking that they're going to be able to figure out humanoid robots and make them useful and profitable for other businesses to deploy in something like an Amazon warehouse or a manufacturing plant. And so if you believe those things are true and Tesla will be the AI real world leader, then you can make a bullish argument for the stock.
Last question, Seth. Now, you guys over at Morningstar, I know you don't do buy, sell, hold. You do stars. Correct me if I'm wrong, Seth. I think you only have 2 stars on Tesla. Is that the equivalent of a sell, Seth?
So 2 stars is overvalued, which is the equivalent of a sell. We have a $300 fair value estimate, which is what we think Tesla is worth. And the majority of our valuation comes from AI and robotaxi. So we do think Tesla will ultimately be successful in these ventures, but we don't think it'll happen next year. We think testing is going to take longer than the current market forecasts and Elon Musk guided to. We don't think it'll be that viable of a product by the end of 2026. We point to more the 2028 timeframe. And so we just see a lower total addressable market and lower free cash flow from these new ventures. But ultimately, we still do think they'll be successful.
Seth, great to have you on the show today. Thank you. Stick around. We check in on some of the biggest movers in after-hours trading. Much more Ask for a Trend still to come. It's been a busy afternoon, and here's some key movers to watch. We're going to look at shares of Take-Two first, sinking as it delays the release of its highly anticipated game Grand Theft Auto 6 once again. This time, pushing it by 6 months from May 2026 to November 19th, 2026. The initial release date, remember, was set for this fall. Take-Two did not offer a reason for that delay. Affirm, meanwhile, topped in revenue estimates for the first quarter as gross merchandise volume also topped expectations, the company highlighting another highest ever GMV record in a quarter. Affirm also providing full year guidance on gross merchandise volume, forecasting more than $47.5 billion. That was slightly higher than Wall Street expectations of $47.4 billion. Opendoor reporting a wider than expected loss per share for the third quarter. The company also reporting a greater adjusted EBITDA loss than expected. Looking ahead to the fourth quarter, Opendoor forecasting revenue to decrease 35% quarter over quarter due to low inventory. Well, tech stocks dragged broader markets lower today as investors grow wary of lofty valuations. Trader Talk host Kenny Polcari weighed in on the so-called cracks in the AI trade and opening bid.
What we're seeing on Palantir, how concerned are you about it?
Listen, I'm not necessarily concerned because we've been talking about this for a while. Valuations have been stretched, and the longer the market kept going up, then the more stretched they became. Everyone's been talking about it. We all know it. This shouldn't really be a surprise. I'm just a little bit surprised that Palantir completely crushed it on every metric, and the first reaction was to sell it, right? As they now bring up all these, well, suddenly it's overvalued, and suddenly we have to take a break, and maybe it can't live up to the expectations and all that stuff. It's all, to me, it's all noise. While I think a pullback is healthy, I don't think this is the beginning of the end at all. I think the AI story and the Palantir story and, NVIDIA and the rest of them is very much alive and well. And on any pullback, I would view it as an opportunity.
So you're looking at this Palantir pullback, Kenny, as an opportunity. Look, it makes sense. This company is crushing it. And let's put even trying to compare it to what the growth rates NVIDIA is seeing, I don't see a lot of companies putting out these Palantir type results. I mean, blew it out of the water fundamentally, blew it out of the water in terms of guidance. I like the conference call. I like Alex Karp. I mean, I like how fired up he is. I dig it all.
Yeah, on every metric, they blew it out of the water. But I just think that the market is finally sitting there scratching its head because, look, Brian, you've seen the divergence between the S&P and the equal weight S&P over the last couple of weeks where the S&P keeps getting dragged higher by tech, but the equal weight S&P now is suddenly starting to churn and move a little bit lower.
Just now, Tesla shareholders approving Elon Musk $1 trillion pay package. So that is your headline. Listen, we had spoken to Tesla financial analysts, Tesla shareholders leading up to this, and their bet had been that they would indeed pass this package. Remember, Musk, like the last pay package, would have to hit these performance metrics, right? Among them, Tesla would have to deliver 20 million Teslas. It would have to deploy 1 million robo-taxis. It would have to deploy 1 million robots. And by the way, hit $400 billion of adjusted EBITDA over 4 separate quarters. Musk coming out. Let's take a listen.
Welcome. So, what we're going to Those bots are just dancing. There are no wires. Those are actual robots. Thanks, guys. First of all, I'd like to just give a heartfelt thanks to everyone who supported the shareholder votes. I super appreciate it. Thank you, everyone. I'd like to thank the Tesla board for their immense support. We have a fantastic board, fantastic group of shareholders. Thank you all. And what we're about to embark upon is not merely a new chapter of the future of Tesla, but a whole new book. And I'm going to talk about that. So this really is going to be quite the story. And Optimus is a fundamental part of that. The sheer scale of Optimus, I mean, I'm going to say a bunch of things that probably I shouldn't say, but but that's what keeps it interesting. I mean, have you watched any other annual shareholder meeting? I mean, honestly, I was like, if you need to go to sleep, sure. But other shareholder meetings are like snooze fests. But ours are bangers. Look at this. This is sick. We got like the cyberpunk nightclub here with real robots just standing there and milling around and dancing. And around our engineering headquarters in Palo Alto, the robots are just walking around the office 24/7 with no one minding them. And then they go charge themselves. And so the scale of Optimus, like I said, that's really going to be something else. I think it's going to be the biggest product of all time by far. Yeah. So, like bigger than cell phones, bigger than anything. I guess a way to think about it is that every human on Earth is going to want to have their own personal R2-D2 C-3PO. So who wouldn't? But actually, Optimus will be even better than that. R2-D2, it's kind of would beep at you, and it's kind of hard to figure out what he's talking about. You need C-3PO to translate, but Optimus is going to be everyone's going to.
That was Elon Musk, as they do indeed approve his $1 trillion pay package there. And that is a wrap from us. We're going to see you tomorrow at 3 p.m. Eastern.